All right, welcome. This is going to be a practice, a training, and it's going to be all about trade planning. Right? It's not going to focus on setup or winning or losing or being right or the best methods. This is all going to be all about trade planning because trading is overwhelming in the best of times, right? A lot of moving pieces in an unknown environment, and we need to structure ourselves. It's going to be about learning to be consistent and disciplined in our actions and what we do, very precise. A practice like this, and what I'm going to do is I'm going to do 30 trades. I'm going to make a plan for each one of them. The plan's going to be the same way. Welcome to Language of Markets. Each time I wanted to show you around the site a little bit, execute them the same
talk
way,
about
and
how
I'm
to
going
get
to follow
around
every bit of the plan
and
for the
what's
30
available
trades.
to you,
That's
a little bit about what we
the
do.
practice. That's the
The language
exercise.
of
This
markets,
kind of practice will
we're
offer
a
a
small,
contrast to our
tight-knit group of
normal,
like-minded
ineffective,
traders.
emotional impulses and beliefs that pull us this way, pull us that way. The idea, right? We need to have a contrast so that we're even aware of this stuff that pulls us around. And so the idea is to see the impulses. We're not going to get rid of them. Maybe we don't take them so seriously, but we want to see the impulses and then execute anyways. Do exactly what you say you're going to do. That's the training. It's like doing push-ups. It's a practice. And for most people, being this accountable and responsible, there's a lot of resistance to it. And so you just step into this best you can. It's a structured practice designed to take out the randomness and to develop consistency, okay? To bring about accountability and responsibility. And responsibility, accountability, this is what brings about new possibilities to us. It gets us outside of our box. And I always need this kind of practice because mostly we're all crazy, including me. And so we need something to balance that. We take incoming data and it's just normal. This is why trading's difficult. And we try to fit it into our beliefs, our worries, our avoidances, and we end up distorting even the best methods. There's a lot of methods out there, but if you don't train yourself to get somewhat balanced here, no matter what new fancy method you learn, you're always going to bring yourself to it and you'll find some way to screw it up in your own personal way. I know, I've done it for years. And so we're going to do a little training here with this. Once we set foundations, then you can pretty much come to any method and you'll do just fine, right? You'll learn consistency and discipline. This ain't for everybody, but when you're ready, you're ready. All right. I mean, if you've done any sort of reading at all, you've learned, hey, I should have a plan. So a plan is pretty simple, right? This breaks down into a lot of different subcategories. But basically, a trading plan is you're going to have some kind of a method or a setup. You're going to want this method to be as simple and objective as possible. You don't want it abstract. You don't want to leave a lot of room for you to get pulled this way and that way. We can't rule it to death, but we want it to be objective and simple as we can possibly make it. A good method is going to always have you following the market rather than predicting the market, right? The market dictates what you do next. The next part of a plan is your trade management, right? You want to know exactly where you're getting in, exactly where you're putting a stop, exactly how you're going to exit. And you want to know all this ahead of time. You want to be making decisions on the fly while you're counting dollars. We're going to know all of this ahead of time. And next is position sizing and risk management. Now, for this exercise, I'm going to be doing several posts. So I'll be talking about all this stuff. But for position sizing, don't sweat it too much. Just sim trade this or make your size really, really, really small. Sim it, okay? The point isn't about the method. It isn't about stock picking. It isn't about being right. It isn't about being wrong. It isn't about any of that stuff. The point is about developing consistency and discipline. So for position sizing, just keep it small. But basically, I'm going to be doing a 0.5% trade per trade of my account. And then I'll go over the details of that. So basically, you come, let's say we're going to use a practice 100K account. Let's say I don't want to lose any more than 10% of a drawdown on this exercise. So I'm going to factor in how many stops can I take to get to that number. And I'll be working through all that math and all that stuff later on. But it's pretty simple. I'm just going to give everybody a default. Just count on taking 20 stops in a row, okay? Count on taking 20 stops in a row. If you count on taking 20 stops in a row, and let's say you don't want to lose any more than 10% of your account, that will give you how much you should be trading, $500 per trade. So think about it. You can do all of those trades, get all that practice in, and not ding yourself too hard. But like I said, sim this, unless you already very sturdy with your method and just need some exercise with your discipline. And so for these 30 trades, by the way, right, step into it. If you violate any of the rules you set out, then reset and do it again. I know this can be difficult for a lot of folks. And then documentation and review. So we'll be taking a snapshot. We're going to put our trade plan right on the chart. And we're going to be entering it into a spreadsheet that keeps track of everything. And then, later on reviewing how we did. That's it, the components of a trade plan. And a method, trade management, your sizing so you don't kill yourself, and then documentation. And I'm just going to be demonstrating all of this and talking about it. So I'm a swing trader, so I trade swings. There's no indicators. I just use market structure, right? I structure a market. You can see I've structured a market here. If you structure a market that's kind of making form out of chaos here. So, what you see is, if I can get my tool to work, swing, right? That's structuring a market. And so I'm going to be swing trading. I'm going to be swing trading stocks over 10 bucks a share and 450K volume. Now I'll talk briefly, I'll be using two setups. So I'll talk briefly about the method, and it just uses swings. What it does is one setup involves same size swings, and how I'm going to do that is we have an impulse leg, right? Swings have components. We have a reaction leg. We have an impulse leg. We have a reaction leg. So one setup involves same size reaction legs. Same size reaction legs. And then the other setup involves an expanded reaction leg. So you can see how this reaction leg is bigger than this one. So those are the two setups. That's what they're based off of. And then they use, various components of the swing. I'll be talking about this stuff a little more as we set up more trades. Now, in order to make this as objective as possible, what I'm going to do is I'm going to use this fib retracement tool, and this is our reaction leg, right? I'm always going to measure the reaction leg. There's no secret to this. There's no special numbers. All I'm going to do is I'm going to cut this reaction leg up in percentages of 25%, right? 25%, 50%, 75. And the reason I'm doing this is so I have a very objective way to enter. And I'll be using the 25% or the 50% on these. And I'll be doing it the same way every single time. So don't spend too much time worrying about the method. Use your own method that you've learned to practice. There's tons of them out here on this platform. So let's just do some of this, okay? So like I said, we want to know what gets us in, what gets us out, and plan it all ahead of time. So here we have Adobe, and you can see we're swinging. And just so you see, again, the simple market structure, it's impulse, reaction, impulse, reaction. Now, if we break this down a little bit, I'll show you. If we come from this impulse, you see swing, it's a smaller swing, swing, and then expand. Notice this looks just like the model I drew. That's what structuring a market does. See, I drew a model of an expanded swing. See, this reaction leg is bigger than this little reaction leg. And so this is going to be an expanded swing. I call this a tri-trade. All right, now this meets all the qualifications. So I'm just going to grab my tool here, put your snap on so you get exact measurements. And again, there's nothing special about this tool. It's just cutting a line for me. So you can use 26%, you can use 25.5%, you can use your secret super fib number percent for entry. It doesn't matter. Just do it the same way every time. All right. What I'm trying to do here is just capture the lower part of the swing where there's a shelf, and I'm just trying to find a way that I can enter always consistently. So now I'm set up. I'm ready to plan. So I'm going to know exactly where my entry is. Pretty easy, right? 25% of this, I'm going to enter at 581.10. Again, don't get hung up on any of this stuff. Actually, it'd be beneficial if you lose all your trades. As traders, we need to learn to lose. My stop is always, for this, going to be the low, right? Or one of these percentages. So in this case, it's going to be the low. Again, nothing superior about this, and I'm sure there's better ways to do it, but I always favor simplicity over technically superior. That's for mindset. So I know exactly 563.50. Boom. And shares, right? We need to calculate that. My target is always going to be 6 to 1. And I'm always going to manage it as when I get to 2 to 1, I go to BE. And then I trail 2R until 6R. So let me just quickly talk about R's because I'll be talking in R multiples. And R multiples is relatively simple. An R multiple is just another way to view price, right? So I'm risking 1R. So if I enter here at this level, and I put my stop here at this level, I'm risking 1R. And since I'm shooting for 6 to 1, I'm trying to gain 6R. Now when I say I go to BE at 2 to 1, that's 2R. So we'll move this guy over to, you see the ratio here, 2 to 1. So I know exactly where I'm going to get in, where I'm going to put my stop, where I'm going to go to BE. And then I'll trail two of these risk multiples until I reach my 6 to 1 target, which is where I will exit. This is my plan. Whatever your plan is, it's fine. Just do it consistently. All right, so that's my 6 to 1 exit. Now let's figure out how many shares. Now this nifty tool, if you set it up, right, and you tell it, hey, I want to risk we decided I'm going to risk 500 bucks. It will give you an idea about how many shares you need. You should also know how to get this the old-fashioned way. So basically what you're going to do is take the distance from your risk, see it's about 17 points, and you divide that into your risk per trade, which is going to be 5.5%, $500 per trade, and that will give you your shares. So here it's giving me the correct amount. So I'll just put that in here. So that's going to be 28 shares. Okay, so there we are. We're planned out. You can write the number for 6 to 1 if you want. So this is the trade. And then over here, we can just take this and create a limit order. Just make sure the parameters are what you need them to be. I'm going to try 581.10 is going to be my entry, so I'm just going to adjust this a little bit. 581.10. 563.50 is going to be my stop. 563.50 is going to be my stop. And then my target is going to be 687.73 up here. All right, so once that's in, so we're just going to sib it on here. We'll place our, just double check everything. We're always going to use a stop. We're always going to use a bracket order. And this is just going to be a resting limit order. So we just submit the order here. And let's see if it shows up in our guy here. All right, looks like we have it in here. I had to futz with it a little bit, not used to this trading view. So we have a buy limit. We just check everything, blah, blah, blah. Make sure our quantity, our limit, our take profit, our stop loss is right. And 58.10. Okay. So that's it. Let's move this tool off here. Close this. Let's get our scale back here. Reset scale somewhere. Yeah, there we go. All right, there's one more part. I entered this into a spreadsheet. There's plenty of different trading softwares you can do. So I'm just going to put the date, which is 1/23. I'm going to put the stock. This is part of the documentation. Adobe, I'm going long. And like I said, this is just a spreadsheet I've made, nothing special. I know my entry, it's 581.10. I know my stop, it's going to be 563.50. It calculates the shares. I'm going to put my setup. I'm going to put my management. And then this will just track all my pending trades. And I'll take a screenshot and I'll put it in here. All right, so this is 100,000 risk per trade. So it's just a simple spreadsheet, and I'll be tracking these and moving them over to the portfolio when they get filled. All right, trade plan set. We'll come back. The only thing invalidates this is if it makes a new high. All right, so I think that's it. Thanks for your attention, and we'll see how this exercise goes.